Hi, my name is Jenna Witherbee. I'm a financial advisor at 401k Plan Professionals, and this short video is to educate you and give you some considerations when it comes to retirement plan rollovers. I personally have over 15 years of experience in the retirement plan industry, and my team has over 80 years of combined experience. So I can assure you we've helped many people over the years when it comes to rollovers. And this video is a part of our monthly webinar series. We have a whole library of different topics and short videos out on our website and our YouTube channel, 401k Plan Professionals. So there's a lot of other resources when it comes to your financial wellness and overall financial picture. And this video is not intended to say you have to roll over your account or even give advice that you should. I'm just going to walk through some considerations, some things that we talk to people about, some things that you can think about. So the most commonly asked question we get is, should I roll over my 401k to my new employer's plan or my current employer's plan? And first I'll just say, make sure that you can. Make sure that you're able to. Different plans have different rules, so ask your advisor on the plan or your human resources department, whoever works with the 401k plan, just to make sure that it's a possibility. Typically it is. If you are eligible for the 401k, typically you are able to roll money in from another employer's plan. Sometimes you can even roll money in before you become eligible to contribute in that new plan. So for instance, if your current employer has a 6-month wait to start in their 401k, maybe you can roll money in, though, immediately upon hire. So just would want to ask questions on the rules. And then usually if your 401k has more than 5,000 to 7,000 in it, most employers will allow you to leave your money in that plan, even if you're not working there anymore. I just wanted to point that out. They're not able to force you out if you have more than 5,000 to 7,000. They may reach out to you and let you know that you could take it out, or you might get something in the mail or something, but legally they can't force you out if you have more than that. Now, if you have a account that's less than that and you leave that employer, eventually they could either roll you over to an IRA or cash you out depending on your balance. So you just want to make sure that you kind of keep tabs on your old 401ks if you change jobs. It doesn't hurt you to have multiple 401ks, but from a tracking standpoint, just want to make sure you know where your money's at. But here are the main 3 considerations when it comes to, should I roll my 401k into my new plan? Should I consolidate? So we'll walk through performance, cost, and convenience. So first of all, performance. Different plans not only have different rules, but they also have different investment menus or investment lineups. Typically, in a 401k or 403b, we're seeing mutual funds as the investment options. You may see other things like stocks or annuities in some cases, but most of the time we see mutual funds. And sometimes what we do for people, if they want us to, is we'll even put investments and their performance side by side with each other to compare this plan's investment performance versus this plan's investment performance. So if you have some sort of statement or printout or PDF from online, we're happy to take a look at that and even put it into an analysis. Okay, the second consideration is cost. And this is typically the hardest to see, especially if you're not used to looking at 401k fees a lot. And so there again, I would invite you, if you have a statement or some kind of a fee disclosure, we're happy to look at it. But the hard thing is with mutual funds, typically the fees are just taken out of the performance of the fund, and you're not really seeing a line item sometimes on what my actual fee is. Sometimes there are something called an asset charge or other fees added on top of the investment expense. But again, every plan is different as far as their investment lineup and as far as their fee structure. And so the more documentation you can get a hold of, or if you can send us over the fee disclosure, again, we're more than happy to look at that and then kind of compare what are your fees in this plan versus what are your fees in that plan. as a general statement, I will say typically the larger the company, the larger the 401k, therefore the lower the fees, just in terms of economies of scale. So a company with thousands of employees and millions of dollars in assets probably will have lower fees than a company with 5 employees and not as much in assets. That's not a guarantee or a blanket statement, but it's just a general kind of rule of thumb. And then the last one is convenience. So some people say, I don't care about performance and I don't care about cost. I just want this easy for me to manage. And so sometimes convenience trumps everything. And for some, it's just easier when you have everything in one place. Especially think of when you move, you got to change your address on everything. And if you're not getting anything as far as statements or emails from a company, it may be hard to track and remember where you have money at, where you have your accounts at. So the main thing is just where your money is and that you don't lose track of it. And again, we're more than happy to help you. We've done this a lot where we do an analysis for somebody, and we're honest. If we take a look at it and it makes sense to leave it where it's at, leave it in 2 places, it's not hurting anything and you're fine with that, that's one thing. Or if we determine, and based on what we can see and your desire is to have everything in one place, then sure, let's get that ball rolling. And so the process is one of 2 things. We can either do a Zoom call with you. It helps out to either log into your old account with you. Sometimes you can request a withdrawal right through the site. Or a lot of times, I'd say more often than that, we hop on a 3-way phone call. So we'll call with you to the old provider to request the rollover. They will simply want to know, how do we make the check payable and where do we send it? And then typically on the incoming plan side, there's an incoming rollover form. And so we definitely help our clients facilitate that paperwork and making sure that the funds get deposited into your account. So here's just a sample. Most investment companies have their own, like I said, incoming rollover form. So it's your information. I've got this money coming in from either this plan or maybe it's a rollover IRA. You'd indicate if it's pre-tax, Roth, or both. These, if you don't know, these are questions we can ask your old provider. But ultimately, it's your money. It's your choice. There's no right or wrong here. You need to review your options and choose what is best for you. We are just here for guidance and, like I said, to give you considerations. More than happy to help answer questions, and I wouldn't pressure you or anything like that. But here's some added resources. Like I mentioned, here's our website, 401kplanprofessionals.com. You can go to the news and education tab. There's a whole library, like I said, of videos and a financial wellness mini series. And same thing with our YouTube channel. You can subscribe. That way you're notified every time we upload a new video. We also have a webinar series. So in 2023, here's all the different topics that we covered. And you can use this QR to go to all the recordings on demand of those. And then looking ahead in 2024, here's the different webinars we're hosting, and you can register at this QR here. Even if you can't attend something live, I still encourage people to register because then you'll be sent the recording automatically. Thank you so much for your time. And like I said, don't hesitate to reach out if you have questions, want me to help with anything. I'd be happy to help. All right. Have a great day. Bye-bye.